President Donald Trump repeatedly warned Americans that if they failed to re-elect him, the stock market would implode. In reality, the opposite happened. Between August and October alone, Trump sent 6 tweets saying markets would crash if Joe Biden were elected, using a word presidents typically avoid. The Dow Jones Industrial just closed above 29,000. "You are so lucky to have me as your president," Trump wrote on September 2nd. With Joe Biden, it would crash. Yet no post-election meltdown emerged. If anything, markets melted up as nightmare election scenarios were avoided and investors celebrated coronavirus vaccine breakthroughs from Pfizer and Moderna. The S&P 500 notched its best election week rally since 1932. And despite a sharp pullback Monday, the Dow soared nearly 12% in November, its best month since January 1987. The S&P 500 and Nasdaq enjoyed their best months since April. "In terms of Biden being bad for the market, we can already see the opposite is true," said Darryl Jones, Director of Research at Hedge Risk Management. Wall Street has moved on from Trump. There's no doubt that Trump's tax cuts and deregulation helped boost markets. His trade war with China and love of tariffs, however, were clear negatives for stocks. Biden is signaling he won't adopt extreme policies that would rattle markets. His economic team, unveiled Monday, is headlined by Janet Yellen, the crisis-tested former Federal Reserve chair with whom investors are very comfortable. "Biden is showing us that from a business and economic standpoint, he's likely to be moderate," Jones said. The strong November performance on Wall Street partially reflects relief that the election removed a huge cloud of uncertainty, even if the votes took time to count. Before the election, there were serious concerns about a constitutional crisis and the transfer of power. But investors have largely shrugged off Trump's avalanche of election-related lawsuits as a sideshow doomed to fail.